Hello, everyone. This is Denise of D. Stephens Bookkeeping and Tax Service, Syracuse, New York. Tonight, we're going to talk about our federal updates for the upcoming tax season. And I also want to have a brief conversation about the major cyber breach at Equifax and the implications of that breach on you and I as ordinary citizens and taxpayers. There are significant implications to this particular breach. So we want to spend a few minutes on that, discussing what those implications are and how far reaching they may be with respect to your particular tax situation. Only you can really assess that once you really know the severity of this breach. Okay, so let's start with our federal updates for the 2018 filing season, where we're going to be filing our 2017 tax returns. Okay, so let's start out with tax brackets / tax rates. Right now, you and I know that there are 7 tax brackets, and they represent also income brackets. That's why we have 7. Under the current Trump administration, the plan for reducing taxes is to reduce those 7, which are 10, 15, 25, 28, 33, 35, and 39.6%, wants to reduce those to 3 brackets of 10%, 25, and 35%. And what that really means is spreading income over larger tax brackets. So you'll be putting more individuals will fall into that 10%, more individuals will fall into the 25%, and obviously the remainder that are in the 39, they'll move into that 35% bracket. But what you're doing is just shifting those individuals out of one bracket into another who find it quite difficult, maybe by $100, may have put them in a tax bracket where they probably can be in a lower one. So I'm hoping that the President Trump will be successful with this Republican administration. In fact, they are debating the details of that tax package even as I speak, that they'll be successful at doing that for the middle class taxpayer, because it will be the middle class taxpayer who will benefit most from this 7 tiered tax bracket to 3. Okay, here is something that's quite interesting that happened effective April 2017, something I was quite surprised by, and that is the Internal Revenue Service has hired private debt collection agencies to pursue and collect, within the law, of course, outstanding debt obligations to the Internal Revenue Service. Now, there are statutory laws that regulate how the Internal Revenue Service will do that, but be warned that the Internal Revenue Service has now hired private collection agencies to pursue collection of outstanding debts to the Internal Revenue Service or to the Department of Treasury on their behalf. So who are these individuals or these individual organizations? CBE, Conserve, Perform Mat, and Pioneer. Again, those collection agencies who have been hired by the Internal Revenue Service to pursue outstanding debt collections on their behalf are CBE, Conserve, Performant, and Pioneer. So the typical debt collection processes, they will follow those. But if you get a letter from one of those agencies on behalf of the Internal Revenue Service, that is a legitimate debt collection agency. Now, that's been confused because have been scams of on the order of whatever magnitude, attempting and have been successful at defrauding taxpayers out of their income on behalf of the Internal Revenue Service and illegally. So I'm putting it out there. It's already out there. Again, those names are CBE, Conserve, Performant, and Pioneer. They are the 4 legitimate debt collection agencies collecting on outstanding debts for the Internal Revenue Service / the Department of Treasury. Okay, remember in early 2017, the PATH Act of 2015 under the Obama administration did, among many other things, in an effort to kind of put a damper, hinder the number of fraudulent tax returns and claims for the Earned Income Tax Credit. To put a dent in that, the PATH Act allowed for the withholding of that portion of a taxpayer's tax refund that included the child tax credit or the Earned Income Tax Credit until February 15th. That portion of the refund that was not directly related to the Earned Income Tax Credit or the child tax credit, that was refunded to the taxpayer after February 15th or just on February 15th, but the child tax credit and the Earned Income Tax Credit was withheld. Well, legislation has allowed within that particular tax policy, the Internal Revenue Service now has statutory power in this upcoming tax season to delay the entire tax refund. So regardless of whether you have child tax credit or the Earned Income Tax Credit built into your tax refund, if you have those in your refund, the entire refund is going to be delayed. Okay, so that is significant. So plan on that accordingly. I know many of our qualifying widowers, head of household individuals, and single individuals now, who rely on that Earned Income Tax Credit and that child tax credit because they are refundable credits, rely on receiving that. You're going to have to plan around that because they are going to be delayed, and further information about when that will be released will be forthcoming. So it may look something similar as to this year's delay and date of February 15th. We could still see that date, but don't be surprised if we do not. All right, so within our tax structure, we have extenders. These are types of tax treatments and tax rules that allow for particular credits, whether they reduce the tax liability or refund or are refundable, I should say. Some of them were authorized and they had an expiration date. Many of them were scheduled to expire December 2016, and they were extended, 1 year. However, many were not. And so we need to hope that under this current administration that he will extend and reauthorize and or make permanent these extenders to these particular tax credits, so that taxpayers can begin to plan and to adjust their tax strategy accordingly. Now, there are several types of tax credits that fall into this extender category. There are some that are more common than others. And then there are others that the others are specific to a specific industry, like windmill or windmill, should I say, the diesel industry. Those kinds of industries have particular interest in these extenders. But then there are a few that our typical average taxpayer should be interested in, because they will impact our tax situation. And those are just the three that I chose are just the three that I thought that are just the most common taken by the average taxpayer. And the first of the three that I selected are the cancellation of qualified principal resident indebtedness exclusion from gross income. So in English, what does that mean? Well, that means that if you are a taxpayer who has come upon a financial hardship and you have a mortgage of some sort, and that mortgage has been discharged under the current rule, that discharge would be excluded from your income. Okay? If this extender is not reauthorized, it will be treated as income. So that's something we may want to look at if we're in a situation this tax year whereby we may have filed bankruptcy or in a domestic dispute, and you end up being that individual, and the disposal of that property generated an income. Perhaps you weren't the one who was the recipient of that. Well, that's going to be treated as income. So let's look out for that. Tuition and fees deduction as an adjustment of gross income. All right. Particularly parents who have students who are in college, and you're supporting that individual student and financially, and you're incurring some or all those costs of that student. You want to look out for that. You want to check in probably with your congressman to see how that piece of legislation is moving along. If that's one of the extenders that's going to be on the list, that's going to get reauthorized before the end of the tax year. Okay, so if that does not get reauthorized, tuition and fees are no longer an adjustment to gross income. What does that mean? If it was last year and that resulted in either a lower tax or a refund, if it's out this year and your income is relatively the same, you can expect an increase in tax and or a smaller refund. Mortgage insurance premiums as a mortgage interest itemized deduction. Are you paying for mortgage insurance? A qualified mortgage insurance policy whereby that premium was treated as mortgage interest? Interesting, huh? Well, that's not going to happen if it does not get reauthorized with the rest of the extenders this year. As a matter of fact, those that don't get extended, they are set to expire. Okay, so retirees, what's new for you in the upcoming tax year? Couple of things. Your contribution into your IRA is at $5,500. That may not be so new. That sounds kind of familiar as last year. But what is also been expanded is the 1 year rollover rule. So that means that individuals who had multiple retirement accounts and who managed those accounts directly or indirectly at various times would roll over those various IRAs and other tax exempt retirement instruments at will. And as long as they were within the 60-day time frame, there was no tax liability associated with it. Well, that tax rule changed in 2015. Any rollovers from any IRA will be treated, you are allowed to have one per year. So a taxpayer needs to decide at what point they are going to move or roll over all their IRAs, or either one IRA. You're only going to be allowed one per year, so that rule is extended into the upcoming tax season. Okay, educators, teachers, public and private. All right, the $250 above line expense deduction, that's been made permanent and it's been expanded. It's permanent so that you can now deduct that each time, $250 or more, in your expenses to carry out your duties as a teacher. But any required education associated with your profession also now is included. So that's the expansion part of that credit. So that is awesome. They're called eligible education deductions for professional development. Any of those expenses related to that, they are also a part of your educator expense deduction, and it is permanent. Yay! Okay. Now, 2017 standard deductions. Okay, what do we have? Again, remember we talked about filing status and marital status a little while ago? Well, here we are, because here is an extension upon that concept, the concept of filing status and that direct relationship with your marital status. Okay, so for the 2017 tax season, you have $12,700 for the married filing jointly or the qualifying widower. $9,350 for the head of household. $6,350 for a person single or married filing separately. And remember, you married filing separate, you MFS. If the first spouse who files, depending on how they file, that's how you are going to file. So if they itemize deductions, you will have to do that, and whether you itemize or not, and that gets sticky. Individuals who are over age 65 blind, your standard deduction is now $1,250 if you're married filing jointly or qualifying widower. If you are single or head of household, $1,550. So our standard deductions have increased. So our standard deduction for dependents, and see, now this may cross in some cases with those dependents with those educator expenses. It's $1,050, and that is contingent upon other factors, but generally $1,050. Now, if you want to know what those other factors is, okay, you can contact me, D. Stephens Bookkeeping and Tax Service. I usually go just by Stephens. I'm so proud of that name. Bookkeeping and Tax Service. I can be reached at area code 315-385-1682. And my email is techrii@yahoo.com. Okay? So any question clarified, or you have a particular tax situation and that you need to bounce that off someone with tax experience, well, you want to contact me. Okay, 25 plus years of experience under my belt. Okay, should I say belt? No, under my skirt. Okay, contributions to qualified organizations. Make sure your gift is going to a qualified organization. Gifts to individuals are not tax deductible if you are an itemizer. And if you're not an itemizer, if at some point in the future you do become one within the look back period, it still needs to be a qualified organization, not an individual. And direct donations to individuals or targeted to specific individuals are not deductible under any circumstance. Okay? And is it $250 or more? Then you need to get a confirmation or an acknowledgement of that contribution. Most 501c3 organizations, you don't have to ask them for it. They got their stuff together. You contribute. They will generate a notice to you for your donation. If you have to request it, make sure the following information is on that acknowledgement. Name of the organization, the amount of your donation, make sure it matches. A description that it's a cash donation and that there are no goods and services in exchange for that or no promises associated with that. And the statement doesn't have to be long and drawn out. The IRS has the general generic information. You could borrow that information if you're a 501c3 and not sure what that document can look like. You can go right on to irs.gov and in the search box, 501c3 organizations, it will tell you. And by way of that, as an extension to that conversation, you can also check with the IRS and the irs.gov. You can check for qualified organizations. They do maintain a list of the type of organizations they are, and for tax purposes, whether they are a 50%, 30%, or 20% organization. And if you want to know what's the distinction between those organizations, contact me, Stephens Bookkeeping and Tax Service, 315-385-1682 or techrii@yahoo.com. Okay, and I'll tell you. Okay, you're volunteering your time to a qualified organization. Again, Meals on Wheels is a perfect example of that. Or hospice, you may volunteer for such end-of-life care organizations or some other 501c3. They have to be a qualified organization for you to take advantage of this if you are an itemizer. Okay, so your uniforms, your mileage, while it isn't as much of a deduction as business miles, you do get a 17 cents for medical, and then you also have your deduction for mileage for your as part of your voluntary service, the value of that service. Now the time, there's no dollar value on time in terms of like, well, the going rate for someone on a salary doing this is $8.95 per hour. You can do that. That is not a tax deductible equivalent. You cannot do that. However, if you are required to maintain a certain dress code and the cost of that and your mileage, voluntary miles, those things are deductible if you are an itemizer. Okay. Business tax rates are 53.5 cents a mile for the upcoming tax season. Okay. Our exemption amounts have also increased just slightly. And so not enough but I will talk about those on probably in another video. Right now, I want to move into the cyber breach into Equifax. Now, you and I understand that Equifax is one of the 3 major credit reporting agencies in the United States, and that agency's servers were hacked, and those hackers were able to steal millions of Americans' confidential financial information for too long of a time. And that time period is reported from May 13th, 2017 to July 30th, 2017. That is a long time for a hacker to not be detected by a credit reporting agency. That is crazy. That's just crazy. Given the fact that if I wanted to qualify for a mortgage, that would be one of the organizations the bank or lender would be using to help qualify me for that mortgage by conveying the likelihood of me repaying that mortgage. So now that generates some questions to me. What is the protocol Equifax had in place, and was that protocol followed? Where in this protocol was the weakness so that these hackers went undetected for over 2 months? And then when they did discover it, it wasn't until August 2nd, 2017, that Mandiant, a professional cybersecurity company, was notified to help them assess the data breach and the scope of the compromise. That is unacceptable. That is totally unacceptable. Why? Because it is the financial history of most individuals in the United States, age 18 and over, especially those, if you're a student in school, in an institution of higher learning, or if you are employed, whether you're retired, you have an employment history, certainly anybody with a credit card, debt to a medical facility, and any other information that they cross-check and cross-share, hackers now have that information. Nothing is stopping these hackers from establishing a dual identity of either myself or you anywhere in the world. Equifax have footprints in the United Kingdom as well as in Canada. Individuals in those countries were also breached. So the number given to the public was 143 million Americans. I believe that number is higher than that, given the number of individuals who are attending institution of higher learning, who have student loans, working, federal work study, or independently working. Anyone who has ever worked, their information has now been compromised. So, what can you do as a victim? Well, here's what I did, because again, I was a victim of that breach. I was a victim of the Yahoo breach. I was a victim of the Blue Cross and Blue Shield, but you've had Target, you've had eBay, you've had any number of these organizations, and these are the big ones. These are not the smaller organizations. So cybercrime is a very common crime. A lot of it at the lower levels is undetected and goes unreported, which is in itself is a violation. But over and over and increasingly, the pattern seems to be that hackers are enjoying a lengthy stay in the servers of these companies. And they are collecting massive amounts of data and dossiers on individuals, and it's terrifying that not only can they parallel an identity for myself somewhere else, they can distort my identity somewhere else. That is a very frightening idea, but a very real one. So if you were exposed, you will go to the website to make that assessment. If you, excuse me, Google that information into the system, you will access, they will ask you for your 5 digits of the last 5 digits of your social security number, and I believe your date of birth. And then after you submit that, you will automatically get a response that tells you, yes, you are probably one of the ones whose information, it appears your information was a part of this recent breach. And then you will be prompted where to go to first register and then monitor and receive free monitoring after that registration. Now, the breach occurred May 13th as being reported. May 13th, 2017, your monitoring of your credit history begins only from the date of your registration, and there is a deadline date of that registration. They may move that considering the number of individuals so impacted, but because it was slowly leaked to the public, and a delay in the public, that we might get a reprieve as taxpayers and as consumers and get an extension on that. That's an awful lot of people. Okay, so my recommendation, yes, register. It's worth it. If someone has stolen your identity, they're not going to register because the registration puts an alert on your social security number. So that is your first line of defense. Do that as soon as you become aware that you are in fact a victim. And if you have ever worked, you are over 18, you are likely a victim of this massive breach. Not registering and not learning what your status is makes you responsible for any of that debt, because or anything associated with that, because you did not take steps that a reasonable person would have if you were to dispute it when it was offered to you. And the fact that it's public, it's being made known to the public. So it's being made known, and ignorance is not a defense in this case. So please do that. A lot of consumers are not aware of the free annual credit report offered by the 3 credit agencies, TransUnion, Experian, and Equifax. You are eligible for 1 free credit report per year. Given the climate that we're in of identity theft, those of us who do financial checkups annually, my recommendation is to move that back to 6 months. We are in a defensive mode now. Cyber identity theft, cyber crime is worldwide. Who even knows if these individuals are part of a network, if it's one person, but where is he or her? Where are they? We don't know at this point. So on the defense, register, get the monitoring service that they're offering for a year. They also have a separate terms of agreement so that if there is any suspicious activity or fraudulent activity on your account, there are liabilities. You are covered under those. So print those off. I printed mine off and stored them on my computer so that I can refer to them, what they are offering and what the limits and the scope of the protection are under that. There is also the recommendation of a credit freeze. Should you do that? Well, that's a personal assessment. You won't know until A, you log into the Equifax website and click on the cyber breach to determine whether you are a potential impact. Okay? Find that out first. Very easy. The cyber criminals are not going to do that. So if you are impacted, do that. Find out what your status is and then follow the protocol that they have established, which is a registration that is going to automatically connect your social security number to this breach. And any activity going forward for that year from the date of your registration will be monitored. You'll get an acknowledgement via email, and you'll use that email address as your username and then move forward from there. So get the credit monitoring they're offering. Go to Consumer Annual Credit Report and pull your report for all three. Compare them. If there's anything in there that you weren't aware of, you need to take care of that. Okay? So do that. It's only a year. A credit freeze, that's an individual assessment. More bad news. The information that the cyber criminals obtained in this cyber theft is enough to file your income tax return for the upcoming tax year. Yes. So the IRS is recommending that for this upcoming tax year, as soon as you get your documents, file your tax return immediately. Even if you need to file an extension, you need to do that. But you file it first. That's the nature and the scope and the magnitude of this cyber heist. So I can see a situation where one of these criminals sells your information to an unethical tax preparer. He's got 4 or 5 legitimate social security numbers and names associated with those social security numbers. He or she already knows the dates of birth. Someone can reconstruct with your social security number. They already know from the Equifax reporting agency where you work, where you're not working, what you earn. All of that information, unfortunately, is now in the hands of unknown individuals. And it's out there for anybody to use. So the idea of a parallel individual somewhere, as well as a reconstructed individual with my identifying factors, is very upsetting to me and frightening at the same time. So be defensive on this particular cyber heist. Okay, so the complimentary offer is being monitored, going to be monitored by Trusted ID, which is a subsidiary company of Equifax. It's for 12 months from the day of your activation. Um, to me, that's not a long time. The last breach where I was a member of the compromised class, I believe I received 3 years of credit monitoring. Both myself and it was there was myself and my daughter, as a matter of fact. Both of our informations were compromised, and each month I would get an activity report on both of us. If our names and social security numbers surfaced anywhere in our credit reports, of course I take advantage of the annual credit report, the free ones every year, and I get all three free from the same site. So just be careful when you're in there, because don't be so quick to escape off the page. Read the page so that you'll know exactly how to move from the next reporting agency to the next, and so that you are able to get all three. Now, just a word of caution. Some of the reports are pretty lengthy, so what you want to do, if you possibly can, is save them as PDFs. So when you go into your file command and to print, if there is an option with your print key, select the option, a drop down key, to see if you can save that document as a PDF. That's a little nifty trick there. So do that, save it, because some of that's a lot of pages for each one of them. One is 19, another one was like 39 pages, and it's not that I have 39 pieces or different credits. I don't have that at all. It's just that certain pieces to the report itself, they modify or they list that particular organization, each individual debt is listed separately, and then a payment history for each, and it's like, okay, so some will get pretty lengthy like that. So if you can find a way to store that on your PC or your desktop, that will save you a lot of print. And then I would also further recommend that on a separate thumb drive, that you copy them from your desk drive or your laptop to your thumb drive, and then you have a portable with you in the event that you destroy your laptop or your desktop is somehow destroyed or virus again. So I would suggest doing that. Okay, so be on the lookout, be vigilant, be aggressive. If you were one who did an annual financial checkup of your credit report, now make that 6 months. If you weren't doing that before, you need to be doing that now. You do not want to have a separate identity established for you anywhere else. You don't want that. That will spell trouble for you. And I see where that could be a problem perhaps in the future. Maybe you get ready to file for Social Security. Maybe somebody else already filed. So those are some of the things that you want to think about. The long-term implications of doing nothing could mean your future financial devastation. Okay? Equifax was a major cyber breach. Moving on, I want to also continue on credit, and this time individual credit cards. Okay, we're coming up with holidays. We've got Halloween coming up. You've got Thanksgiving. We've got Christmas, New Year, Kwanzaa. You have Hanukkah coming up. You also will be bombarded with credit card offers. Okay. Given the current climate, but also the very basic question, do you need another credit card? Is this something you need? Can you pay cash for it? You need peace. We need peace in this environment where we are under siege by our computers. The things that we have come to rely on have now been used and turned on us. And so you need some peace this holiday season. Don't aggravate or frustrate that peace with additional credit. You might even want to consider celebrating with just a smile. Who said we had to purchase anything with a credit card? Financial discipline includes no. I have made no my friend. I am encouraging you, taxpayer, fellow citizen, fellow American, avoid credit card use. Now, if you have a credit card, and this did happen to me, and you have zero balance, you may want to just use it for a very small purchase just to keep it active. I was shocked to find out that I was sent a notice by this credit card company, major bank, I won't name it, that it had come to their attention that I hadn't used the card in over a year, and that it was about to be canceled if I didn't use it. So if you are one of those people like I am, and you are notified of such thing, a small purchase, something for $10 or $15 that you know you can pay cash for, just to keep the card open, because quite candidly, we live in a society, and we live in a world now where you just can't live without a credit card. You can't book a hotel room, a rental car, a plane ticket, a dinner, a reservation. You need a credit card to do that. So they're useful when they're not maxed out. And if they're maxed out, that means that there is a disjoint somewhere, and that we're not telling ourselves no, and that is not a good financial healthy symptom. Okay, so avoid your credit card this holiday season. Be blessed, be at peace, and it's okay just to enjoy watching others enjoy it, and you don't have the responsibilities, and you don't have the worry of how am I going to pay for this after it's all said and done. Okay, so with that, this is Denise of D. Stephens Bookkeeping and Tax Service, located in Syracuse, New York. P.O. Box 69, Syracuse 13204. If you need to write or send me some tax documents you'd like me to review, I can be reached by phone, area code 315-385-1682, or you can email me, techrii@yahoo.com, or inbox me on Facebook. And by the way, like me, follow me, and I'll chat with you soon, okay?